Mining, markets, and more. You're tuned into Chairman's Briefing. I'm Rachel Lee, ready to break down this week's crucial developments. Gold prices have shown resilience in the face of recent economic data, edging slightly upward with the release of a cooler than expected inflation report. The latest consumer price index figures revealed a 2.9% year-on-year increase, aligning with or slightly below market expectations. We're observing a nuanced market reaction to gold, with some mild profit taking occurring in what analysts describe as a buy the rumor, sell the fact scenario. These tame inflation numbers are fueling speculation about the Federal Reserve's next moves. Currently, the market is pricing in a potential 0.5% rate cut at the Fed's September meeting. This anticipation of a more dovish stance with monetary policy is contributing to gold's sustained strength. Adding to gold's appeal is a backdrop of geopolitical tensions, particularly in the Middle East, which is driving some safe haven demand. As a result, gold is hovering near its record highs, with December futures last trading at over 2,500. Technical outlook remains bullish, suggesting that gold's current momentum may continue in the near term. Gold ETFs marked their strongest month of inflows since April 2022. Global gold-backed ETFs added $3.7 billion in bullion investment, with North American funds finally joining the positive trend. This influx, coupled with a 4% rise in gold prices, pushed total global assets under management to a record $246 billion. Now, European funds have recorded inflows for 3 consecutive months, with the UK and Switzerland leading the charge. Asian investors, particularly India, continue their 17-month streak of positive flows. IAMGOLD has delivered a robust second quarter, showcasing the company's strengthening financial position. With over $915 million in total liquidity and increased production guidance, IAMGOLD is capitalizing on the current strong gold price environment. A significant milestone for the company is the achievement of commercial production at the Côte mine. The company is well funded to increase its ownership stake in Côte from 60% to 70% by buying back the 10% interest this November. This move reflects the company's confidence in the mine's future performance in a favorable gold market. Lundin Gold posted impressive quarterly results with record revenues of $301 million from selling about 130,000 ounces of gold at an average price of about $2,379 per ounce. This led to a record adjusted EBITDA of $195 million and strong cash flows. Production at Barrick's mines, particularly in Nevada and Papua New Guinea, has surpassed analyst estimates. This robust output, combined with favorable gold prices, have significantly boosted the company's financial position. Notably, Barrick's free cash flow has seen a remarkable increase, providing a solid foundation for its global expansion projects. Now, while maintaining a cautious outlook, the company has reaffirmed its annual production guidance, aligning with industry analysts' projections. And of course, even in a lofty gold price environment, there's always going to be one that disappoints. B2Gold reported lower than expected earnings and was forced to reduce its 2024 guidance, primarily due to an unexpected setback at its Fekola mine in Mali. The issue stems from excavator damage at the mine. It's expected that there will be production impacts in the second half of 2024, resulting in a loss of approximately 50,000 ounces of gold. As a consequence, B2Gold has trimmed its 2024 production outlook. While the news initially triggered a market sell-off, the company's shares have since shown signs of recovery from their recent low. Gold Fields has made a significant move by acquiring Osisko Mining for $2.16 billion Canadian dollars, paying a 55% premium on Osisko's recent share price. This acquisition gives Gold Fields full control of the Windfall Gold project in Quebec's Abitibi Greenstone Belt, consolidating their previous 50-50 joint venture.
Because we bought the first 50% and now we're buying the second 50%, you can quite clearly see through the announcement we paid more the second time around. But when you average it, I think we've certainly been able to average in at a lower entry cost than anyone else would have been able to do if we were buying 100% of the asset today.
The company views Windfall as a future cornerstone asset in their portfolio, attracted by its potential for long life production and exploration upside in the surrounding area. Now, this deal highlights the ongoing trend of major miners looking to acquire promising junior projects, particularly in stable mining jurisdictions. Bonterra is a Cisco's neighbor and a JV partner in the region. In the immediate aftermath of the takeover deal, the company saw some dramatic accumulation. Now, the following slide is pulled from Bonterra's pitch deck and captures the mineral endowment of the immediate region, including the Windfall deposit's high-grade 7.4 million ounce count. Bonterra characterizes the area as a young and emerging camp. And if the Windfall District's discovery potential is, in fact, still in its infancy, this corner of the Abitibi could generate significant news flow over the coming months and years. Skeena Resources is emerging as a winner with its SK Creek project in British Columbia's Golden Triangle. It's on the radar of potential acquirers. Its project in British Columbia's Golden Triangle is a past-producing mine that's rapidly evolving into a Tier 1 asset, with impressive open-pit reserves of 4.6 million gold equivalent ounces. Now, the company's 2023 definitive feasibility study paints a picture of remarkable profitability. At conservative gold prices, SK Creek promises a hefty 2 billion Canadian dollars after tax NPV and a robust 43% IRR. But here's the kicker. At current spot prices, these numbers could skyrocket to 3.1 billion Canadian dollars and 57% respectively, with a payback period of less than a year. BHP workers at the Escondida copper mine, responsible for 5% of global copper output, have gone on strike. Despite the Chilean government's mediation, BHP and the union representing 2,400 mine workers couldn't reach an agreement over compensation. Under Chilean labor laws, strikers cannot be replaced by external or internal personnel. According to a report by Goldman Sachs, a 10-day strike action could impact BHP's earnings by upwards of $250 million. Elsewhere in Chile, 270 workers at Lundin Mining's copper mine walked off the job. The Yukon government has taken legal action to appoint a receiver over Victoria Gold and its assets. This move, known as receivership, is often a last resort for dealing with companies in severe financial distress. The government filed an application in an Ontario court, and if approved, a receiver would take control of the company's assets and affairs. Victoria Gold isn't giving up without a fight, though. They've stated that they plan to oppose the application in court. Trading in Victoria Gold is now halted. The amount of money raised for mining on Canada's leading stock markets, the TSX and its venture exchange, jumped 62% in this year's first half compared with 2023's same period. And as many as 40,000 environmental and opposition activists protested in Belgrade to demand a halt to Rio Tinto's $2.4 billion plan to open Europe's biggest lithium mine in Serbia. Demonstrators marched to the capital chanting, "You will not dig," and "Treason, treason." This is the latest sign of unrest against a project backed by the country's president. Jinpeng Mining, a subsidiary of Chinese gold and copper giant Zijin Mining Group, has initiated a judicial review against a Canadian government decision regarding the sale of a Peruvian gold mine. The case centers on Jinpeng's recent $245 million acquisition of Pan American Silver's gold asset in Peru. This deal, which included a potential additional $50 million payment, has come under scrutiny from Canadian authorities. As this story plays out, it could be a test case on how other Canadian companies approach their deal making with regards to Chinese investments. The suspension of First Quantum Minerals' copper mine in Panama has unleashed a gold rush of chaos in the surrounding rainforest. Illegal mining in Panama has exploded by a staggering 317% since the mine's closure, with over 250 instances recorded this year alone. The situation has reached a critical point, with environmental risks looming from stockpiled copper concentrate and the reckless use of chemicals like cyanide by illegal miners. Despite urgent calls from industry leaders for swift action, Panama's new administration is playing a dangerous waiting game, delaying negotiations until the new year. And there you have it, another week of mining highs and lows. Subscribe to get these insights delivered to your inbox every Thursday, or if you prefer your news served YouTube style, smash that subscribe button and bell notification. Thanks for being a part of Chairman's, and I'll see you next week.